Well, thank you guys for coming out this morning. I know it's a beautiful morning out, and the first thing to do is start talking about tokenization, but we really appreciate you being here. I'm here with our head of sales, Simon Herrmann, and also our guest today is Mitch DiRaimondo from SteelWave. He's one of the product managers. They have built $10 billion worth of 10 billion square feet of commercial real estate product, mostly basically creative office as well as life science centers, really beautiful properties. And so we're working with them as a client. We wanted to kind of bring you some real life solutions of how we're using digital assets and security tokens. There's a lot of misinformation out in the marketplace on digital assets. Many people get confused when they hear blockchain. They immediately think about tokens or security, cryptocurrencies as well as NFTs. And rarely do you hear them talk about security tokens as being part of that digital asset class. But there's a big distinction between those three assets. I want to make sure that people understand the distinction. When you look at cryptocurrencies, these are like bearer bonds. These are currencies that are used on the blockchain, but they don't have to be, they're not regulated by the SEC, and you don't have to be an accredited investor to buy cryptocurrencies. And also, I think one of the dangers about cryptocurrencies is that it's like cash. If it's in your wallet, if somebody takes your wallet, you lost your cash, right? The other thing is people come to me about NFTs and say, I want to put some NFTs in my property, I want to sell them, I'm going to buy this property and divide it by 4 or 5 and sell this property, and I'm going to make money by selling it, and all the owners are now going to share in the dividends of the property. Well, that's totally illegal, right? NFTs are also not securities, and so therefore can't be used in a way to create investment opportunities where shareholders are coming in with the perceived notion of getting dividends or sharing in some type of interest payments. Those are all considered to be securities as well. So that brings us to the point of security token offerings, which are STOs, which is what we focus on. And I think this is what the SEC opened up the opportunity in 2018 to allow for a legal way of issuing shares, digital asset shares, to investors so they can participate on high quality investments. That was a light bulb moment for RedSwan. I mean, we came in here to change the world and try to make real estate investment a better place. So we use these digital security tokens to actually divide up the equity or even divide the debt on major assets to allow more affordable opportunities for investors to participate in. So that's a very exciting piece of the industry, because many of these beautiful properties that Mitch builds are not even in the viewpoint of these smaller investors. He's going to BlackRock, KKR, all the major investors to write the $20, $30 million checks for his projects. But he's totally overlooking the outside market of small investors who may have $50 to $1 million to invest, but not $20 million to write a check for. So I think this is the void we're trying to fill with digital tokens. And so we want to come here and tell you, just have a kind of town hall meeting just to talk a little bit about where we see the benefits of security tokens and how it can help property owners like Mitch. So we're going to have Mitch talk a little bit about his experience and what he's doing with RedSwan and what he sees in the industry. But before we get into that, I just want to kind of give an idea so you guys can understand how we see the benefits of security tokens in your business. So if you're a property owner, you've been sitting on equity in your properties. More than likely you have 35% of your equity in your asset is just locked. And you guys know what opportunity cost is. So if you have a $50 million property with $25 million of debt, that's $25 million of equity just kind of locked and sitting in your property. And the only way you can normally get that equity out of your property if you're an owner is to sell the property. You do have a chance to refinance, but you all know that when you refinance, the bank is going to have an LTV ratio they like to stick to. So if the property improves in value 10 or 15%, you're only getting a fraction of your equity out of the property. So still, you have a lot of equity just trapped there. We think by recapitalizing that property with digital shares, a property owner now can pull 90% of that equity, that $25 million, 90% come out, put that in your pocket to put to work onto something else, as opposed to let it sit in that property until you sell it. So this is really one of the major benefits we offer property owners, is to be able to put that lost opportunity cost to work by fractionalizing the shares making it more affordable, and then we issue those shares out in allocation. We don't sell one token at a time, but allocations of like $1,000 or $10,000 allocations is what we do in order to make it more affordable to U.S. accredited investors or even foreign investors who want to buy into U.S. dollar-denominated assets. So this is the exciting part that we like about what we're doing. But on the other side of the equation, there's also the investor who's coming in. And for U.S., they have to be accredited investors, and for non-U.S., they don't have to be accredited investors. But they get a significant benefit as well. One, they get access. They get access to projects like what SteelWave has to put out in the marketplace, which they're never invited to. But they also get affordability, because now the requirement is not $10 million to come in. The requirement may be $2,000 for them to come in. And that makes it affordable to buy 2,000 or even 10,000 shares at a level that they feel comfortable with, right? But they get the exact same benefit of the person who might own 50% of the shares of this property. It's all ratio divided by pro rata of their ownership. So they get, and then the last thing they get is the liquidity factor, right? Having the ability to take your shares to a secondary exchange and allow a broker to sell it to the market based on the market price is a benefit that investors in real estate on the LP level have never had that opportunity, right? They always have to wait for the property to be sold. When the property is sold, the developer or the sponsor will now return their equity plus their profit. And that might be 5, 7, even 15 years down the road. Well, to be honest with you, that's a prohibitive factor why a lot of people don't invest in real estate, because one, is just too expensive, and two, the waiting period is just too long, right? And they associate that with a big risk. So those are I wanted to clear up some of the thought processes behind security tokens, but really want to get into how we're actually applying it towards real life scenarios and how we're applying it towards property owners like Mitch. And so Simon is our head of sales. He's been very, very successful in bringing on a lot of projects to our platform. We just hit $4 billion worth of properties that we've tokenized. Lots of hotels come on the platform, retail, definitely a lot of multifamily. So Simon, talk a little bit about what you're seeing from the owners out there and what they're telling you, how you're actually making this happen to get them excited about tokenization.
Magic. I use a lot of magic. So it's been well received. I mean, and I think there's a lot of forward thinking. I would say definitely on the developer side, where they're always looking at projects that are 2, 3, 4 years down the line. So they have to think of something new and creative, and they're taking this technology on and saying, okay, for one, the capital that we're offering behaves better than BlackRock or JP Morgan that are the big boys in the room and just kind of push around, even good sized firms like SteelWave, they're the majority of the equity, and they say, hey, these are our rules, this is our game that we're playing. So the equity that we can provide our investors that are excited about being in the projects like SteelWave's putting together. So that makes a team that wants a long-term project that's not going to push either one around. And those LP investors, so the developers and the owners are understanding that this equity is going to behave a little bit different. We're going to say behave better than a normal equity stack. And then a lot of them, kind of grew up through the ranks of friends and family money, and they've had a lot of their friends come back to them and saying, for whatever reason, a death in the family, marriage, whatever else, saying, hey, I need to get out of this deal. And I've been in it for 3 years, or for whatever reason, even if the property is performing well, they're saying, hey, I need my money back. And you're getting a really well-behaved, responsible sponsors, GPs going, you know what, we want to offer that liquidity to our LPs because that's the right thing to do. So we want to convert our entire portfolio to a digital asset. So they're seeing that, and they're seeing that this is just the natural progression of how people are going to buy real estate is going to be having that liquidity option and just going on your phone and using the RedSwan app and saying, I got a big bonus check today and I want to put $10,000 into a nice real estate property with SteelWave, and now I'm invested in real estate and I can go home and collect a distribution check. So it's a good story. It's not too complicated. As we always start off with, this is real estate at the end of the day. It's just a different form of showing that LP equity person what they own is just say, look, instead of a PDF, you own a digital security token and a digital wallet, but it has all the legality of everything you had before. So it's a good story.
Well, let's hear from Mitch. I mean, Mitch, you've worked with Simon quite a bit, and I've also been on some of those conference calls with your executive management team. I mean, what are some of the things that inspired you to want to work with RedSwan?
Well, I mean, traditionally real estate's been pretty archaic. Nothing's really changed in that industry forever. So SteelWave, we've been doing this for like 40 years now. The amount of property we own and where we own them are in very high-end, very sought-after areas, right? San Francisco, LA, Orange County, go down the list. And when we're raising money for these, usually the minimums are extremely high, right? And it's extremely high, and to be an international investor specifically into this stuff is almost impossible. So after traveling, I mean, we did a bunch of traveling. We were, worked in the crypto space, kind of came up in the crypto space, and you really saw internationally that there was no on-ramp for these people to step on, right? Some guy in Africa could make $5, but it doesn't matter if he can't put it in a bank or he can't trust in an account. So that's why I was like, okay, if we can take really high-end real estate and offer it in areas that we previously couldn't, it'll sell quickly. And for us, we're really trying to, we deal mostly with Facebook or Tesla or all these other tech companies where it's a lot more stable than investing into a government, right? So if you give them an offering where it's like, hey, here's an on-ramp, let's get you in, let's get you exposed, it's great. The problem that we ran into is scale, right? Most of our deals are very large. This kind of gets into what we're doing now and where we plan for the space to go. Right now, I think the best thing you can do in the real estate is really, recapitalization of different, equity pieces, debt pieces. We all know what's going on in the world right now with interest rates. Money's become more expensive. This is a really good on-ramp to get that void, right? Usually when you have debt markets starting to step on the brakes, equity markets will follow along. When that happens, there's a big opportunity for mezz debt. And I think, that's an opportunity for RedSwan and for SteelWave to really step into applicable things.
Interesting you say that, because you're now talking about one of the products we're coming to the market with soon, but which is a product for mezz debt. Yeah, we think that mezz debt is way too expensive,
yes,
and is taking advantage of many sponsors because they're the last capital going in, so they can look at this capital stack and say, I can charge you 18%, and you can afford it, right? And we think that by providing a flat mezz debt opportunity in terms of a capital source would be good for sponsors, also be good for us to help blend projects we're recapitalizing for you, right? So we can raise equity, but also be able to raise some of the debt on that project, and then be able to find a lot of sources out there from regular lenders who are going to give you the best rates because you now have a better LTV for them to get behind.
I think that's kind of the biggest thing is, as this space grows, you're going to start to see more and more opportunities step up, right? And if you can really use tokenization to excel into those opportunities, I think, that's where it's going to start to go. This is still a pretty young market, right? I mean, smart contracts came onto the scene really in 2017 area, so we're still pretty young in here. I like to say to our investors, look, we're in the first 2 innings of a 9-inning baseball game, right? And as more opportunities come to the space, as you guys start to step into different fund offerings, may that be debt offerings, equity pieces, and different stuff. Now, again, these are opportunities that people just didn't have internationally, and candidly, a lot of people in the States too, right? Where these are hidden private investments. These aren't going out and stepping into a REIT or going out and some boilerplate deal. This is high end, very specialized, and that's something that you really can't get access to now.
Yeah, and you mentioned REIT, and there's a benefit of the security token that REITs don't have, which is the K1 tax reporting, right? So, but you can the Wall Streets of the world can actually put their clients into a security token, right? Merrill Lynch can sell our security tokens because it is a security, but those instead of a REIT that's broad and has Wall Street kind of capital and excess expenses to it, is you get a direct access to a SteelWave, and you get K1 tax reporting. So it's a new animal, and I think a lot of people are excited about that.
And you said it well. I mean, look, the nicest thing about tokenization is you're not hand-holding your LPs, right?
Yeah.
Every time I want to make a decision, I'm not going to these guys and going, hey, I want to change the color on my stairs out front, right? There's none of that. It's like, if you want to make the decision, you make the decision, you go for it, and then the repercussions are, your whatever your ramifications are.
Yeah.
And I think that's huge. I mean, especially for us, we've done SteelWave, going through 40 years of market experience, you go through quite a few cycles, right? So we went through, discretionary funds. We went and raised discretionary funds and deployed those. Now we're mostly doing joint ventures. So we'll get like 2 or 3 big players together, click them together, and then run an offering. With tokenization, I think the way to scale it is institutions, right? Institutions need to step on and actually provide the bigger capital checks and then let retail investors come in for the smaller pieces. That's the only way you're going to be able to fund like these massive deals. So, and you said,
And that's
well,
exactly
yeah.
what we're doing. I mean, we have specialists that are focusing on family office and high net worth investors and institutions because they're interested. I mean, they just lack of knowledge. I mean, that's what's going on right now. I talked to I'm in Houston, Texas, and one of the guys living in my building, his son owns one of the largest wealth advisory firms in Houston. They have like a 52-story high-rise in downtown. And he had no clue that digital security tokens even existed. So when I asked him about tokenization and asked him about his digital asset license, because you have to have a license to sell digital assets as a security broker. And he didn't have that because he said, I don't want to get involved with cryptocurrency. It's just too volatile for my clients.
Yeah.
I don't want to take that risk. And I said, but we're talking about real estate, digital real estate shares. He was like, looked at me like, wow, is that even available right now? I said, yeah, that's exactly what we're doing. We've got $4 billion. He says, I got to get on your site. But see, this is the problem. But I think the problem will be solved when more people are aware of it, right?
100%.
And I think that, it's, like I said to you earlier, it's a chicken and egg situation. You have a pipeline of $15 billion worth of beautiful assets that many people here in the United States will be in awe of, especially many people overseas who are trying to get their capital out of their country into the US where they feel is safer, right?
Definitely.
And so the problem is visibility of your assets, access to your assets, and price point to buy shares of your assets, right? And so we're working extremely hard, to create that pipeline of business so that people can come and see opportunities and then tell us how much they want to buy on a price point that meets their budget.
I think you said it well. I mean, the awareness is the biggest thing, and the only way there's awareness is if there's more quality deals on the site. I originally ran a crypto hedge fund, and when I was, raising money, a lot of people were skeptical of crypto, right? They're like, okay, well, it's crypto, volatile, moves up and down. I really like when you're pitching security tokens, as you said, like when people understand the tech behind it, there really isn't that pushback. It's like, wait, this exists. Like you can actually take, your waterfalls and just bake it into a smart contract, and then you're good to go.
Yeah.
They're pretty eye open, and I think I haven't gotten much pushback. I don't know about you, especially like we talk to a lot of people in Asia, Japan area, with their real estate returns the way they are. They're seeing this as a massive opportunity to start to move some capital around. You see a lot of it in China where they're trying to get a lot of money out of China right now. There's a lot of institutional investment there. African nations, developing nations like that. There's a lot of capital that's out there flowing that like people just don't know about, and then they don't understand how to put it into quality investments, like you're saying.
Yeah.
So
I think the biggest challenge that we've seen, and I'm just being very blunt about it, is that property owners that we've talked to who are just totally clueless about tokenization or digital period wonder, hey, how much risk is involved in this? I need to move my asset in the next 3 months, right? How certain can you be that you can make that happen for $20 million or $50 million? And if you can't answer that question the same way I would answer it as a broker who's going to sell it, then they're a little bit nervous about it, right? And I think that that's going to actually change as we have more projects and more deals getting closed. But I believe that they need to be able to expose themselves and their assets to the whole world by digitizing and putting something out there. Because if people don't know who you are, then they don't know that they can invest in you. And most of the world doesn't know, even though your company is a very, very well-established company, they don't know that you exist, and they don't see the assets you exist.
Right.
And when they do see those assets, they know it's not for them. right?
Right.
And we're here to kind of change that equation.
Yeah, and we'll have a tipping point at some point in time, right? Which is going to be, and this is a discussion I have a lot of with the owners, is, you know, eventually you're going to go out to raise money, and if you're not providing the liquidity option, you're not going to be able to raise the money, because all these investors, family offices, even institutions, they're going to be like, we need to have that liquidity, because now our business model is wrapping in, getting into a deal, sitting on it for 12 months, 24 months, figuring out if there's a different opportunity cost over here that I can fractionally sell. You know, if we put in $1 million, they don't have to sell all $1 million. They can sell $200,000 worth of tokens, you know, and if it's gone up a little bit, then they can go move that into something else. So that's hitting home a lot too for the owners, is saying, like, if we don't do this, we're not going to be able to raise them. Our friends and family won't invest in us because they just want that liquidity option.
Yeah.
So
Well, the market is changing for sure.
Yeah.
And I think we're all going to have to make a pivot to change with it. I mean, let's face it, over the past 15 years, interest rates were going down. And as a broker, you made money easy. It's the easiest thing to do is sell a property, put it on the market. Because cap rates went lower, the price went higher, everybody's happy. Well, the reverse has taken place now.
Yeah.
Interest rates have jumped up, they're going to keep jumping up more. And so therefore, prices are coming down, which means that you're going to see a lot of attempts to sell properties and very few actually getting done, right? Which, what does that mean? That means that the property owners like, you know, SteelWave have time on their hands in order to tokenize and possibly start looking at alternative ways of generating capital, because putting on the market with a broker right now is not going to get the results that they received 2 days ago.
Absolutely. And I mean, even if you're raising, if you can raise any sort of capital at even like 50 bips lower than anyone else right now in a distressed seller period, like you can own a market pretty easily. And that's really how we see it. It's like, look, you know, a lot of people are going to be hurting over the next 18 months, right? With everything going on, you are going to start to see distressed sellers. It's just, you know, debt's coming due. A lot of people pulled out a bunch of debt 3 years ago, and, you know, now it's time to face the fire, and you're starting to see it. And, you know, we see it quite a bit. The way I see it is it hits New York, it kind of works its way west, really, in the U.S. And right when, you know, all these interest rates started to come up, we flew out to New York and had conversations with everyone, and pretty much across the board, they're like, look, you're going to start to see a debt issue, right? Banks are going to go, okay, where's the money, right? So when that happens, you know, there's 4 to 8 months of like hold on that, and then it affects the equity markets, right? And then the equity markets start to feel it as well. So I think right now we're just starting to crest into that, which is the perfect time to really be launching the token. And I would say that this is the first period since smart contracts, this whole thing's come out, where it's a test, right? You're seeing a lot of people lose a lot of money in crypto. You're seeing a lot of these projects funnel out that really don't have application. And that's where STOs are going to come to the scene. People are going to be like, look, I just made a ton of money in some, you know, call it Dogecoin, whatever it is, right? What am I going to do with this, right? I want to put it into an actual hard asset, right? And, you know, 8 months ago, 9 months ago when we were pitching this, everyone that was involved in the crypto space was like, hey, you know, I don't want to buy something that's giving me 12 to 15% return.
It's boring.
Yeah, it's boring.
I want a 200% return.
Yeah. And now they're like, oh.
Yeah, how's that doing there, buddy?
So now it's
How do you like me now?
Well, and to your point, we won't mention the company, but, you know, we sat with the CEO of a large CeFi, not DeFi, but company, and we're like, look, you need security tokens on your balance sheet, on your treasury. He's like, it's too risky. And we're like, wait, what? Like, it's real estate. It's SteelWave's real estate, you know? And he's like, no, I don't want to do it. And we're like, okay. And then now he's on the front page of the paper with no business. You know.
But I think, like, again, as you said, well, over the last 15 years, it's been interest rates going down, and it's easy to borrow money, and you can pretty much get anything funded you want. And, you know, anyone can make money in a bull market, right? It's the people that actually make money in the bear market that are, you know, those are sustainable backing. So when we have that coming onto the scene, and we have, you know, the whole economic crisis going on right now, and I mean, it's bad in the U.S., but go international, right?
Yeah.
That's when you start to see some real inflation issues.
Yeah.
I mean, look at Sri Lanka right now. Like, the president just left. So, I mean, there's a lot of investment opportunity in the U.S., and I think this is the easiest on-ramp for people to wrap their heads around. And that's really what we're trying to diagnose it and position ourselves. So.
Yeah.
Well, before we get to some questions from the audience, but let's just talk quickly about pricing, because I think that's another area of concern for our sponsors as we're looking to put projects on our platform. We're trying to provide investment opportunities for our customers that are sound, preferred equity interest in real estate, so that they're getting, before the sponsor's getting paid, they're getting paid first as LP investors. But you look at the type of interest yield they can generate investing in your project that on a recapitalization basis, as opposed to investing in a project that are being under acquisition.
Definitely.
Where do you think they can get better yield if we were selling one of your assets or tokenizing one
Well,
of your
as
assets?
of right now, I honestly don't think the token market is ready for heavy touch, acquisitions. For us, most of what we do is we buy and we make it absolutely, totally different. Buy level, very cool, heavy touch. Right now, I think, you get into the issues of, guaranteed fundraising and all this other stuff. That's coming in the pipeline. I think in the next 8 months, you're going to start to see people raise funds to go out and acquire and develop deals. That 100% will be there. Right now, the best on-ramp is your recaps, and especially with what's going on in the debt markets and equity markets right now. You're going to see a bunch of people like, all right, what do we do now? Where are we going? Where are we getting the capital? And I think that's where tokenization and RedSwan really going to be able to thrive. So, I mean, I think the return rate on an acquisition and heavy touch development is probably a little bit better, just because that's what we do mostly. But I think your best on-ramp right now is probably in the 20 to 50 million recapitalization area. Is kind of where we want to be.
Down the middle of the fairway.
Exactly. Yeah, we're not trying to go for the hole here. We just want a nice par, start out good.
Yeah.
So.
Yeah.
Well, with a recapitalization, there is a consistent cash flow already in place,
Exactly.
right?
Right.
So we can promise a 6, 7, 8%, whatever the property can actually pay out, versus with an acquisition, there's a cap rate involved, then you're not going to be paying out a lot more. I'm talking about cash on cash dividends than you're taking in. So I think recapitalization actually provides our investors much more consistent yield year after year, with hopefully the upside maturity in the capital asset itself going up.
Especially in a fully leased building that's already running, right? So if you have a full lease from a top tech tenant, right, and you're like, okay, I'm now selling a $20 million slug one of my LPs wants out. That sells internationally like hot water, right? Because they're like, okay, this is stable, we know it's already there, it's being paid, and we know this company is not going to flop, more or less, right? So that's really where I think you can start to raise some dough. But again, we're early, right? And the only way that this actually starts to raise is to buy the good quality products and bring the good quality products to good quality investors and actually build the infrastructure up. Right. So I think it's one step at a time, but it's I think we're winning in the first couple innings here, and then kind of the field's coming to our advantage with current capital markets, and I think it's starting to become a perfect storm.
And you said you 30% cash on cash returns for us?
Yeah. That's so quick.
You did not say that.
Well, we are looking forward to seeing $15 billion worth of assets on RedSwan's platform to tokenize, but I know that's to come. But we're going to prove ourselves to you. Maybe we're going to start off with a smaller asset, but I think that's how it grows. I mean, everything grows from try and test. I mean, I don't know who just told me that you have to fail in order to be successful. And I don't see failure being that you're not getting as much traction on investments, on deals that you're bringing to the table. But that is a learning lesson, right? Because we're now understanding what each one of our users wants and how much their appetite is for acquisition. And then we can point those types of projects, opportunities to them that they really want to jump on. So it's a learning process.
Absolutely.
But I want to open this up, yield some questions. I know that you guys might have a few questions about tokenization or tokenization as well as STOs that maybe we can answer for you. I'll start with Jeff. Go ahead, Jesse.
In 1 to 2 sentences, so as concise as you can.
It's tough for me.
What are the top 2 or 3 risks from an investor's perspective? So if I'm someone that wants to contribute capital to a SteelWave deal through RedSwan on your marketplace, what questions should I be asking in terms of risk, and how should I be thinking about what are the risks?
You want to take that, or you want me to?
I mean, you have the inherent property risk, right? I mean, just like any investment. If you would have bought Netflix stock a couple months ago, you're not happy, right? It dropped 77%. So we have that same dynamic. I would say the question we get is, how are we getting paid? And what is the risk of me getting the money from SteelWave's revenue stream, their actual rental income? How do I get it in my wallet, right? So we pay out through a stable coin. So we use USDC, which is still holding up and safe. But I would say that if we were using Terra, that would have been a big problem, right? So then all of a sudden their digital wallets disappeared, not because of the property, but because of something that happened on the back end in the tech world. So I think paying attention, for us to pay attention to how we can pay out, and we can pay out in US dollars as well. It's a different type of system for us, but I would say that would be kind of the technical risk involved.
And one other risk that we try to mitigate is the sponsor itself, right? We want to make sure we're working with sponsors who have experience, they've done this before, have a track record of success, so that we're not like trying out a startup developer with our client base, because we want to make sure there's a proven success rate of delivering dividends to their investors. Yeah. Good question, though.
So how cost effective it is for a fund manager to raise a traditional method of raising debt, right? Or compared to the tokenization, right? I mean, you use tokenization. So this particular question, we always get it from the issuers actually. So because we've been kind of in this space, so just wanted to understand from your perspective.
Our costs to the property owner?
Yes.
Yeah, so we have an upfront fee. It's kind of legal tech fee, which is rather small, and then we charge basically a 4% fee for every dollar that we actually deliver to the client, new money coming into their deal. I would say, larger projects, they might go and hire a Wall Street firm to do a broker dealer type thing, and you're probably getting, you guys, 8%.
Yeah.
You said 8?
Yeah, and that's a traditional, right? So we're actually quite a bit on a equity raise from a CBRE or something that straight real estate, you're in the 3 to 5% kind of range for cost to hire an equity broker to bring you equity. Debt's obviously cheaper. That's a commodity, so you're looking at a 1% fee. So we wouldn't, our mezz debt piece the product that we're going to launch in a couple months is going to be a lower fee to get that placed, much more like debt. So yeah, it's not, and then there's no recurring cost for the property owner. We have a asset management fee for the investors, the LP investors that come in, and so they pay a small minimal fee for every dollar that they have invested. But after we raise the equity, there's no more cost for the actual property owner.
And irrespective of whatever the amount of there's no cap.
No. Yeah. We're raising money right now. Some groups, 8 million, I think, is our smallest raise, and then we have another group that's 75 to 100 million for one of the larger projects in Miami.
Okay. And so these projects are already, there's a collateral, is the property is already there, right?
Yeah, we have development that's owned by the sponsor that's fully entitled, or we have recapitalizations of a property that's existing, has the current revenue. So we have both.
So do you have a example of a greenfield project as well? That it's nothing you can build. You just have an entitlement of the project.
If it's entitled, yeah, we're not going to take something unentitled. That's too much risk for our LPs to go into and then create the security token. And if it just does not, if the city comes through and says we don't want the housing or whatever it is, we're not going to do it. But if it's entitled and they own the land, then we can move on that and raise construction equity.
The way we look at it is tokenization right now, if you own the building and you don't have a time restraint, it's perfect, right? If you need to go out and go, okay, I want to buy this piece of land and then I'm going to develop it ground up, right? A, you're going to have to run pretty quickly, you're going to have competition. But B, usually there's capital calls, right? And when you're raising something like this, right? If I wanted to go raise, $100 million to do a ground up development, I'm handed all the money day one in a lot of ways, right? So then it's like, okay, now I got to pay out a certain percentage to the people that just bought in, and I'm looking at a piece of dirt. So then now that's a whole new, how are we going to give a holding tank of some sort of return? You can do stable coins, you can put it in a bank. There's some other options, but that's another whole avenue. So if you own it, you can deploy it immediately, preferably with a stable cash flow from a top company. That's the best way to do it right now.
Yeah. And we'll get to that tipping point where we have enough investors and our network's large enough worldwide that we can fund, a large amount of money in a very quick amount of time. So that's just us, the growth of, and we get new LP investors every single day. 50 to 100 every day are signing up. So we've got some good growth. We've got a family office division that's going out and making those connections. So to his point, right now there's a longer process, but our goal is to condense that as quickly as possible, and then in a sense show some interest of a property that's coming soon, and then go to our client and say, look, we can raise this for you in 3 days. We already have people interested in or allocating money to us. We just open the fund up for sale and we'll close it and deliver the money to you. So that's our next phase.
So in RedSwan, are you seeing the kind of request or demand from the investors to get a secondary, because to liquidate their primary
Sure.
token by right? Because I think Ed mentioned that there's liquidity 24/7 happening, right? So is that more from a traditional ATS angle you're talking about, or more from a RedSwan secondary marketplace angle you're talking about?
Well, good question. First, right now it's using a third-party ATS. So we partnered with a couple of third-party ATS broker-dealers who would now take an offer or a position to sell some shares for a client by matching it with investors who want to buy into this particular real estate asset. But we are building our own ATS. We have a partner right now that's sponsoring to build our ATS so we can have a full service from A to Z, from issuance to secondary as well. But yeah, liquidity is important. All sponsors ask us, what does the secondary market look like? And we always point to some of the success stories are out there, like the Aspen Hotel is now on the T0 secondary exchange, and you're seeing the trading. Even though it's light, you're still seeing some activity. What we're hearing is that most people who are buying aren't really interested in selling right now. They really want to hold. I think they'll sell when they feel there's pressure to sell, or they feel there's a significant upside opportunity to sell. But I think having that option to be able to sell is something that is new for investors. And again, they have to get comfortable with that. They have never had that opportunity before. So it's just all about learning, educating. I mean, our whole job is educating the public.
And it's a maturing market, to be fair. I mean, this is all new. To give you some sense of the power behind that secondary market is NASDAQ's creating their own secondary market to handle, it's called Link, L-I-N-Q. Coinbase, because they don't currently sell securities, they're creating their own security. So in theory, you could take our security token and bring it to Link. You could bring it to Coinbase's security exchange, wherever you could, just like your Bitcoin, you can move that around, or your Apple stock, you can sell it through, E-Trade or, where Charles Schwab. So that's happening and going, and there's a lot, like billions of dollars of Wall Street money is going into creating these secondary exchanges. Ours is going to focus on commercial real estate. Class A commercial real estate. We want to be the go-to for that. We want to be the Coinbase of commercial real estate. But those liquidity pools and options are absolutely happening, and quickly.
Absolutely. From a sponsor's perspective, it's very good for them to grab
Yeah.
token, and then token 1, 2, 3.
Yep.
Because the investors understand, the real investors would see.
Yeah.
And also, you can sell your GP, if you have a 5% GP interest as a sponsor, you can put that on secondary market instantaneously.
Absolutely.
So that's really where we see it, is kind of you can set the price and go from there.
Absolutely. And another area that we're developing on is the decentralized financing. Decentralized financing with cryptocurrencies had some issues because they didn't have security licenses, and so they got slapped with some fines because of that. But as we're seeing the decentralized financing for STOs, you now have an asset that you're backing, which makes it a lot more stable. So we look at options for our customers. Rather than have to liquefy their investment, they can just borrow against their collateral. So these are things that we're developing because we think this is going to be use cases that are going to be in high demand. So we're putting our fingers into it right now so that we're able to offer that to our clients. Any other questions? Mike?
What is your vetting process like to bring quality sponsors onto the marketplace?
We look for the best that we can find. We get a lot of requests. I mean, you say a lot of no's, believe it or not. Just either it's too small or we don't know. If somebody doesn't have financial statements to send to us on their property, that's definitely a no. whether it be a development project or a project that they is already stabilized. But I think we're looking for size because most small investors could already pick up, corner stores and mom and pop type real estate. They can do that themselves. But really what they're after is the type of real estate they have not had opportunity to buy. The kind of product that SteelWave develops, they would love to have in their portfolio to be able to say, I own a bit of this, this, and that. So we're really going after those type of sponsors because it's less risk for us to know we're working with a sponsor that is capable of delivering the type of dividends that they promise. So that's our basic vetting process, is looking at the sponsor, then looking at the project.
Are you looking at like years in business, balance sheet and all that, or?
Absolutely. I mean, everyone we've worked with so far has many years experience. We know them from our days in multifamily. We've met like Mitch and his team has, like you said, 40 years experience. These are the type of property owners we want to work with for many reasons. One, they're stable. Two is that we're doing 1 or 2 projects, but they're continuously growing, either have 50 more projects in their portfolio and they're continuing to get larger. So by us starting off with them as a client, we have someone we can continue growing with the same type of product type. Good questions. Anybody else? Justin?
Quick question, what product type are you most excited about for tokenization?
The ones that offer the best opportunity for the investors. I mean, ones that have better yield. Like right now we're seeing a lot of hospitality come to us and a lot of office buildings come to us. We just had I won't mention the name, but a huge REIT that has almost $2.5 billion worth of office product. And I looked at the balance sheet or the financial statements, for the past couple of years, they're showing some losses because they've had, some vacancies in the office buildings, and there's some questions about whether or not some of their tenants are going to release in the next 5 years. So they're kind of anxious to get some capital into their basket, and they're willing to pay out a little bit more yield to our investors to do so. So you think about it, our investors are really coming into those projects at a little better price point, and with a kind of a guaranteed preferred yield is a really great scenario for investors to be able to come into on that level. So we're really bullish on office buildings. We're really bullish on hospitality. The ones that we like, but they probably don't have the stronger yield, of course, is multifamily. I think that might change, but also industrial is doing really well. So we can buy into industrial triple net type of deal and may pay out 5% yield, which is attractive to our investors as well.
To add on that real quick, and it's a little sidetrack that Ed and I keep coming back to is, we think in the future there'll be this blended, for multifamily, this blended, rent from us in a big apartment building, and every month you're buying security tokens of the property that you're renting. So it's this blend of renting and owning where everyone's just like, oh, I have to rent for the rest of my life, or I'm hoping to buy a home one day. But it'd be pretty neat if you could combine that the tenant is buying into the property that they're renting from and capturing ownership like that. So the owners would set aside some security tokens or some ownership and be able to offer that as an incentive to tenants to come rent from their place. And okay, that starts to build this gap where those people now are creating wealth. They start getting a distribution from their own property that they live in. And then also, affordable housing always has gap funding. It's really challenging and really expensive. So it really starts to harm projects or kill projects if they can't get that gap funding. So we're working with some really good affordable housing groups that own thousands and thousands of projects, saying, okay, we think there's some altruistic capital out there in the world that doesn't need a 10% or 12 or 15% IRR because they have so much wealth, or they just want to do something a little bit better for the community, where they can offer that gap funding and we can sell that security token note. So we're going to go out there, and that's not your normal hey, put your money in and get the best return, but there's a real kind of working capital out there that's kind of doing better for the world. So interesting stuff for us to kind of think about that we can do now.
Cool.
How many accredited investors do you have on the market today?
We have roughly 6,000 right now. We hope that we continue to grow. We doubled from last year. We hope we can double again by next year. But we're raising some capital right now. That's why we're here in town. We're raising our Series A. So we really want to grow that to be 60,000 members to 100,000 members. We think that would solve the liquidity problems for our sponsors, where we can get things sold out within a week because we have that kind of buying power. So that's one of the things we're doing, really building up our assets under management and also building up our user base. Both sides of the equation will create better activity for us all.
So one last thing, so when is there a plan for you to start attracting retail investors who are non-accredited investors?
International, yes.
International.
Yeah, we're definitely, we opened an office in Lagos, Nigeria. We're tied to a very strong media group in Vietnam that has 30,000 users, because those are the markets where they have a very vicious appetite for our product, but it's just too expensive. So working with groups out there who can wrap our FCOs, make them more affordable, and push them into those marketplaces, we'll be able to come to Mitch and say, we'll have your capital tomorrow, right? You need $50 million, give us a week and we'll have that done for you. Because there's, when I was at Cushman Wakefield, my career was built on going after Asian capital. I would take projects that haven't hit the market yet to Asia, and they look at it and bring me offers. I go back with 6 or 7 offers on properties, and they get done, right? Because they have to fly 8,000 miles to come look at the property. By the time they look at it and go back to do the underwriting and get approval, it's sold already, especially in the declining cap rate marketplace. So going out there and getting ahead of it was what we did. And I believe the same thing is going to happen right now. Once they see the products that are available, they're going to be all over it, more so than even here in the United States.
And the non-accredited goes into Regulation A, and we are licensed by the SEC, so we have to follow those rules. So I think Mitch mentioned earlier, like if you have time on a project, and that's where we are going to have a discussion with Mitch, which he doesn't know about yet, but about let's convert one of yours into Reg A, and then we can capture accredited and non-accredited investors, which opens up the whole crypto community and everything else. Because if he's like, hey, we have time on this project, let's just see if we can start raising money and pull it in and recap this deal. We can close the fund every 2 months and reissue a raise, maybe at a slightly different price as the property starts changing, whatever it is. So yes is the answer. It's just a lot of our clients are like, hey, we want money in 3 months, and the Reg A process takes 9 to 12 months to kind of do, and it's very expensive. So it's just it's more of a client-driven process but yes, we want to be able to offer that for our clientele.
I feel like that's like the real proof of concept for tokenization, right? It's like when you really fully decentralize finance, anyone's able to buy whatever they want for their own decision, right? I think if you can go place a bet on the Patriots to win the Super Bowl this year, you should definitely be able to go buy like a piece of real estate, right?
Yeah,
I think that's something that the U.S. needs to start to see, and I think internationally they'll start to see it pretty quickly. So.
Yeah, absolutely. Well, thank you all. Really appreciate you coming out. It's been good questions, good content, and if you didn't, we're going to also play this back for others to see on social media. But really happy for your attendance here today, and hopefully stay in touch with RedSwan. We'd love to work with you. Yeah, thank you.
Right. Thanks, guys.